Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and in many people's minds, the mortgage rates plummeting have flipped the housing market, and as such, it will bring back an army of buyers and demand back into the market. But remember this very, very important thing. Even if interest rates don't reach 10%, more and more American households are broke. So the interest rates really don't matter for them. However, the really important thing to understand is the Federal Reserve did not say they were going to lower rates. In fact, after the CPI report came out and interest rates plummeted, the Fed had another meeting and essentially told us the federal funds rate may be between 5 to 7%, which means the interest rates have a lot more room to go up. Now, having said that, also purchase prices have a lot more room to go down. And I believe what we're seeing right now is similar to what happened back in July. People's emotions got the best of them and they jumped back into the market too soon and potentially missed out on the opportunities of their lifetime. And that does not need to happen to you. Now remember, I'm not your financial advisor, even if I want to be, even if you want me to be, even though my bio is as a realtor, a loan officer, an instructor in all things real estate, plus a renter, a father, a husband, someone that had a foreclosure, a bankruptcy, a repo, a tax lien that followed me, and someone that got out of the gutter. I have excellent credit and I own real estate right now. So please, for all of that, guys, like this video, subscribe if you haven't already, and don't leave me hanging. You guys know I need to hear from you. So shoot me a comment below, guys. But regardless, let's get started on this video. And what we're going to do is we're going to read Redfin's new weekly housing market update. And you guys, the trends from week over week, astonishing. Everything is still going in our favor. If you're like me on the sidelines, a well-positioned buyer waiting for the deal of a lifetime. Now, the name of the Redfin article that we're going to explore today is titled Housing Market Update. The fastest mortgage rate drop in 40 years saves homebuyers $100 per month. And again, you guys, $100 is not a lot per month to save if you're upside down $30,000 on your mortgage. This goes on. Mortgage rates dropped from over 7% to 6.6% this week on better than expected inflation news, bringing some hope to prospective buyers. The largest weekly drop in mortgage rates in 40 years. So it was a massive drop, you guys. But again, the Federal Reserve didn't say that. To me, it's all emotional. Now it goes on. Along with the slowest annual home price growth since the start of the pandemic, is providing some real relief for would-be homebuyers' budgets. Last week's better-than-expected inflation report led to the biggest single-day mortgage rate drop on record and the largest weekly drop since 1981, with rates declining from 7.0% to 6.61% during the week ending November 17th. Talk about whiplash, am I right? Declining rates are bringing some buyers back to the market. Mortgage applications shot up 4%, seriously, from the week before during the week ending November 11th. The typical mortgage payment nationwide is now $2,430, down from $2,542 with last week's 7% rates. To look at it another way, a home buyer on a $2,500 monthly budget can afford a $380,000 house with today's 6.6% rate, giving them an extra $12,000 in purchasing power. That same buyer could have bought a $368,000 house last week with 7% interest rate. So obviously, as people are starting to learn, interest rates do have a direct impact and correlation with home prices, right? And we don't need the recession, hyper supply, unemployment rate to go up, foreclosure wave, right? This is happening for one primary reason. Equity went up too much. It broke all fundamentals. It should have gone up over the last 2.5 years about 10%. Instead, 40%. So in my eyes, we have maybe 25% from right now to go down even more in home prices. At least that's what I'm seeing could possibly happen, depending on, remember you guys, depending on the metro area. But now let's jump into one of my favorite parts of the article, this week's leading indicator. Let me read this paragraph right here, guys, because again, I hate the narrative and the actions that Redfin is doing, and I get it, they're a realtor company, so they have to stay over optimistic. But it's starting to get disgusting. It's starting to get sickening. Let me just read this first paragraph. Serious buyers. So apparently only serious buyers, okay? So if you're not serious, don't read this. Serious buyers who need to purchase a home as soon as possible. Again, I hate that, as soon as possible. Why rush? But regardless, you guys, serious buyers who need to purchase a home as soon as possible can feel good about pouncing on a home this week. Again, so they're saying pounce on a home this week, knowing it could cost them upwards of $100 less per month than the same home would have costed them if they had signed the deal a week earlier. More casual buyers may want to wait a few months, as there's reason to be cautiously optimistic that the worst of inflation and high rates are behind us and monthly payments could come down. So personally, I take offense to that because I'm not just a casual buyer. I'm actually a very super frustrated and very serious buyer right now. I would say I'm more serious than so many people, and I'm not rushing back in. I'm not going to go pounce on a deal. I'm going to let the Federal Reserve continue to do what they're telling us they're going to do. And they're telling us and warning us there's going to be pain in the housing market. To step out of the housing market, it's going to take a toll, right? They're going after the labor market. As a result, housing market's going to get destroyed. But again, you guys, that's their narrative. It's not mine. Let's jump back into the leading indicators. So obviously, rates declined to 6.6 from 7.08. That was the biggest weekly drop in more than 40 years. Now, here's the stuff that's really showing the quantitative tightening now. Mortgage purchase applications were down 46% from a year earlier. This is massive. This is a very, very bad thing if you're in the real estate industry, especially in the mortgage industry, because we're right behind the tech. You know, tech industry got gutted faster than I thought. Real estate industry is next. We can almost guarantee that, guys. And it's already happening right now. Now it goes on. People that searched online, so online searches for homes, is down 35%. Home buying demand is down a whopping 37%. Year over year. Touring activity, y'all, is down 34%. It's 31 plus this 3 right here. So it's down 34% year over year. These are huge, huge numbers, okay? And I really hope you guys can appreciate how severe that data is and how shocking it actually is, because it's signaling to us we're in a flash crash, okay? The crash has already started. We're coming down and staying towards a downward trajectory in prices as of June. So it's fair to say that the housing market crash started mid-2022 and is only going to get worse. And the question is when is it going to head the other direction and start going up again? And that more than likely will not and should not happen until things are more affordable once again. And who knows how long that's going to take. Now let's visualize some of this data and jump into some charts right now. Now, starting with median sales price, and I'm going to ask you guys a question before I'm done with this slide, and I want to get your opinion. But I want to show you guys essentially that week over week, we had another decrease in median sales price. This has been absolutely great. We're now sitting at a median sales price average of $357,500, which from peak right here, guys, is down $34,000. And I've already calculated the difference of payments. You're going to pay $9 less right now than if you purchased right here in June. So you're going to pay $9 less right now, and the purchase price is going to be roughly $34,000 lower. So here's a question that I have for you guys, and I want you to comment below. But let me point out that this blue line represents 2021 median sales value. And roughly right now, we are $6,000 away. Again, we're $6,000 away from being under the 2021 median sales price levels. So my question to you guys is do you think that we on average, as far as a nationwide average, do you guys think that we will have on average a year over year price decline this year? Okay, so tell me if you guys think that this year, this red line will go under that blue line. And again, we're only $6,000 away, which basically means we need a drop of median sales price of $1,000 for the next 6 weeks. And if that happens, we will officially have a national average of year over year price decline, which is huge. And again, we're only $6,000 away from that. So do me a favor, comment below and let me know whether or not you think we hit that this year or not, and the reasons why. Now, the reason why median sales price is plummeting is obviously because of unaffordability. Here's a look at homebuyer mortgage payments, guys. Now, after taking into account the lowered interest rates, the mortgage payments are up 42.6% year over year. So there's no need to celebrate, right? It's still extremely, extremely unaffordable and overvalued for most Americans. But this is, this is interesting because if you look over week to week, massive plummet, right? So this kind of plummeted down a fair amount because of the interest rates. So it's going to be really especially important to watch what that effect is going to have on demand and supply. But again, you guys, this is a sign that mortgage payments actually did go down. And, what that is showing us is the principles of why we should wait right now. So the longer we wait, more than likely, the lower the purchase prices will be. So when the Fed does go back down on their interest rates, depending on when that is, and if home prices are also lowered, y'all starting to see how you can become such a great winner right now? Are y'all starting to see that? Because again, if we compare June to right now, homes are on average $34,000 less and on average $9 cheaper to own a month. So that's winning, right? When compared to June. Now look at this, guys. This is really exciting. As you can see, week over week here, our months of supply shot up. Okay, so this is months of supply, and this is important to look at because this is not just taking into account total units. Okay, this is also taking into account demand, which is really important to do right now because we know sales are down significantly, and normally 76% of sellers rebuy. So the fact that less people are selling means we need less inventory. And you guys can see we went from 3.3 months of inventory all the way up to 3.6 months of inventory. This is great news. And as this number starts to continue to go up, guys, and you look at that, it's like a skyrocketing up. As that continues to go up, what will happen is homes will have to sit on the housing market longer. And the longer that these homes sit on the housing market, the more likely it is that those sellers are going to reduce their prices, giving us a better opportunity to purchase. But again, you guys remember, none of this matters unless you stay ahead of unaffordability and stay ahead of inflation. How do you do that? Get out of consumer debt. Save as much money as possible, work as much overtime, right? Those are the things that you need to be doing right now on top of positive mindset, loving your family, and becoming an expert in your local housing market. But let me show you one more chart right now, just to show you how unaffordable houses are right now, just in case you were thinking it's time to buy right now, which I'm saying it's not time to buy. Take a look. Now, this is Black Knight's payment to income ratio versus 30-year fixed rate mortgages. This is as of September, so I don't even have October's information yet. But as you can see, from about 2020, unaffordability has skyrocketed. The payment to income ratio has skyrocketed. We are at 38.9%, okay? And that's the share of median income needed to make the monthly principal and interest payment on a purchase. Shocking. Is that not shocking? 38.9%. It has not been this high since the early 1980s. Shocking information. Now, in conclusion, guys, please, if at all possible, continue to wait, especially if you're a well-leveraged buyer like me. All we have to do right now, guys, is control our emotions long enough for the housing prices to further come down until we find our dream home. But I do understand that I do have some viewers, and these are core viewers, that are currently in the process of purchasing. And although I think it's way too soon, at least they are in a much better position than they were at the peak in June, because now at the very least, we have a whole bunch more options. We have way more inventory, so we don't have to settle, and many buying incentives on top of that. Not to mention, if we compare June to now, you're saving $34,000 if we look at purchase price and interest rate and compare the two. So in those ways, if you are buying right now, although I don't approve of it, at least you are a winner when we compare where we came from. So for that, you guys, if you did sit on the sidelines, if you have been following my journey, at least pat yourself on the back, because remember, Just 6 months ago, the fear of missing out was so bad. There was multiple offers on just one property, and in order to secure the property, generally you had to go over, this is crazy, the appraisal value. You had to offer over the appraisal value. You got no buying incentives. And many times you had to waive the protections, right? The contingencies, the inspection clauses, and things of that nature. So regardless, I don't think it's time to buy right now. I don't think it's even close to hitting the bottom of the housing market. But if you are, because I do have some hardcore subscribers, I'm not knocking you guys. I'm just saying, I wish you would have waited a little bit longer. But nevertheless, you guys, if you are out there investing in real estate, you know this, that I wish you luck and I hope you win.